Guy Adami.
Yes, sir.
Great year. I know you've been on them. No, you have been.
No.
Good calls. What's going to happen next year?
First of all, Karen's been on top of it, and Tim has, who's in absentia. I believe is in Europe right now. In terms of the banks, some we've gotten right, a lot of them I've gotten wrong, but Citibank is the one that continues to stick out to me, and we can talk about what a great job Jane Fraser has done. There's this getting themselves out of bad businesses, focusing on what's working, the restructuring of the bank. But if J.P. Morgan, and we've done this math problem, is worth 3 times tangible book-ish, I think it's fair to say that Citi should be half of that, and half of that gets you about $148 stock. And, we've been pretty consistent on this. That's where I think it's going. And although Citi's had a huge run off the lows that we saw earlier in the year, I think there's still a lot of room to the upside here in Citi.
The interesting thing, Karen, about Citigroup is that Jane Fraser has done a great job. And one of the things she's done is to get bigger in terms of the stock valuation by getting smaller, shrinking the company. This is not a winner-take-all strategy. I feel like she's being very targeted, very smart about just ditching businesses that she doesn't need, doesn't want.
Right. Well, also, she's been really good about trying to get them integrated to be one bank after just a series of acquisitions over decades that were never put together. And, she's created a culture there where I think, building the asset wealth management business. But it is a great time for banks overall. It doesn't get any better than this. The economy is growing. Regulation is heading their way. Credit quality is great. Capital markets are really good and looking to be just as good next year. Then you have the asset wealth management business. All of that's great. And then you have AI making banks. They're a great candidate for what's a business that could be so much more efficient than it is. If you could cut out 2% of expenses, you can increase your margins because the margins are so thin in banks. That's a fantastic setup. That's why they're up this much. But just because it's the year's ending, I'm not going to sell my banks and look for something new.
You still own it. You're keeping it.
Citi is the C in my carb trade. Yeah, that I get a lot of guff for.
Why?
That would be a word Guy would use. You get
it's these anagrams and, carved and energy is an OIH. It's very odd. But
as the energy guy, I fully endorse.
The OIH.
The OIH, the carb, the XOM, whatever. We'll get to XOM in a bit, Guy Adami. Just settle down.
I'm fine.
148 on Citigroup. Would you agree with Guy's take?
Yeah, you have the economy, you have dereg, you have a host of things that are going right. Investment banking fees are up 50%, probably across the board. Is it something that I want to buy now? Probably not. I think you got to let these things breathe. I think you go into a new year. There's the CapEx spend. There's IPO markets. There's M&A. There's tax cuts. There's immediate expensing. You could name all the things that are tailwinds. What are the headwinds? If the economy slows, if unemployment rate moves higher, then you're going to have less loan demand. So I think there's a host of things that could happen. Even if rates come down, there's a sweet spot for net interest margins where if rates come down precipitously, those margins will get squeezed. So I think you have time to wait on the banks.
Yeah, I just think at least the investment banks, Morgan, Goldman, I think they price a lot in right now. You're going to continue to hear, capital markets. You're going to continue to hear about the IPO. While the IPO market was up a lot this year, it's coming off a very small base. And next year, it's really dependent on these massive names, right? And I suspect, this is the time of year you kind of make some big proclamations or whatever. I suspect that one of these big names in the AI space that a lot of folks are hoping that goes public next year actually blows up and it goes the opposite way. And we see a lot of reverberations, whether it be the banks that are lending to these folks. You just can't, VCs have some, whoa.
That's what you just said. This is what Dan Nathan does. You kind of put the very calmly drop the bomb in there. I assume you're talking about the tussle-headed guy's company out in San Francisco.
Well, listen, if they
couple $100 billion in valuation.
If OpenAI can't raise $100 billion and soon, let's say they tap the debt markets, I mean, I don't know. Like the mildest slowdown there, and when I say blow up, I mean it's not going to zero or anything like that. But if the wheels are not greased over there, then there's a whole host of other things that are not working, not just in technology, but also in our economy. When you think about the contribution of CapEx to our GDP, and there's a whole host of other things that we've been talking about as it relates to what are the major components of GDP. Well, if you think about, let's just say we have unemployment that is going to 5%, maybe because of efficiencies from AI. There's a whole host of things going on. There's an article in the Wall Street Journal that say, CEOs are planning for 2026, and hiring's not one of those plans. They're not firing people just yet, but they're certainly not hiring people.
Letting people roll